Our next guest says there's a bubble in the Vancouver housing market, and it's just a matter of when it bursts. CCEC is a Vancouver-based credit union with 2/3 of its exposure to the mortgage market. For perspective, we turn to the chief executive, Ross Gentleman. Ross, good to have you with us.
Nice to be with you.
If this bubble bursting is not a matter of if, but when?
Well, that's everybody's guess at this point. I'm not going to try and put a date on it. I think the issue, though, and when you look at the rapid increase over the last month or the last year, that cannot be sustained, and so we're going to have some kind of a correction.
Is this an external event that triggers the correction, or is it simply a case of what goes up must come down?
I think it will be a bit of both. I think we're going to see some of the interest being expressed by investors, particularly offshore investors, potentially recede, and that will have impact. But I think we're going to see some political action at municipal, provincial, and federal levels in response to the concerns that are going to be voiced by the public.
So foreign investment, from your perspective, is this a genuine concern?
We don't have as good a level of information as we ought to have, but some of the analysis has been done by Andy Yan and others and reported out locally in Vancouver certainly suggests that we have a large amount of housing stock that is held with offshore interests and is not occupied, which is a supply problem.
You've been quoted as saying that you've been approached by people off the grid. What do you mean by that?
Well, we get approached as a lender by people who are essentially trolling the lenders to see if they can find someone to finance residential property development or purchase of rental properties. It's interesting to just see people coming in and exploring the interest from outside the province or locally with a real speculative outlook. We don't end up financing those deals in any numbers at all. That's our preference is to finance our members who tend to be in the middle income to lower income range and are struggling in this environment. But the people who have just chanced upon us surprised us.
So while you won't be lending to those generally who don't have a Vancouver-based address, you do still see a housing bubble and that it will in fact burst. How do you, considering 2/3 of your coffers are exposed to this, how do you grow more conservative? What do you do?
So as a lender, we have to think more about how we shape ourselves in this market, because as a credit union, we're owned by our depositors and we're committed to serving this particular locality. And we cannot simply turn off the tap as an international or national enterprise might. So we're committed to being a little bit more conservative, which means we look at the loan to value ratios a bit more conservatively. We look at the debt service ratios a bit more conservatively, and we talk with the borrower or borrower household as thoroughly as possible to shape the deal that's going to work for them. But in almost all cases, we're dealing with primary residences, and in those cases, people do not abandon their obligations very easily. So we feel pretty secure as a lender.
When you say you're not playing the high end where volatility will be most dramatic, what do you mean by that? I would have assumed that the higher end would be more deep-pocketed home buyers who'd be able to ride out any kind of black swan economic event.
There is that argument, and that's a fair argument in many respects, but sometimes the 10, 20, and $30 million homes will vary in value far more dramatically than you will see at the $500,000 or $750,000 home. So we're active in that smaller condo market. Less than $1 million is really the market that we're in. So we're working with people where the values have not increased as dramatically over the last 3 years and will continue most likely to be less volatile.
So how do we intervene in an overheated bubble-based housing market without putting a chill on the cooler markets in Alberta, Saskatchewan, Manitoba, and anything east of Ontario?
I think there are two strategies that one will be undertaken by people locally in response to the needs of their various communities, but I think non-market housing has to be developed at a greater pace to try and deal with the affordability issues in Greater Vancouver. And my credit union works as a banker for the cooperative housing sector and many housing co-ops and some of the not-for-profit housing co-ops, and we're working with investors on that side as equity partners to try and facilitate the non-market housing stock. The second issue, though, is really public policy, and I think your last guest was speaking to the issue in a more dramatic way. All three levels of government have to deal with it. The property transfer tax system has to be reconsidered. The annual property tax system has to be reconsidered, and the special privileged position of capital tax exemptions, capital gains tax exemptions for primary residents has to be revisited by the federal and provincial governments.
We appreciate your insight, Ross. Thank you for your time.
Thanks.
Ross Gentleman is the CEO and General Manager of CCEC Credit Union. He joined us from Vancouver.